a very warm welcome to all our esteemed guests, speakers, and partners. Thank you for joining us today at our third Gulf Business Breakfast briefing for 2025. Where today we are focusing on the latest investment trends and the hottest investment trends in UAE. This year is already proving to be a landmark for Gulf business. We are proud to kick off 2025 with a renewed emphasis on high impact events like this one, bringing together some of the sharpest minds across the finance and investment landscape. Today marks our third business breakfast briefing for the year, following the success of our tech and telecom panel in April and our real estate focused panel in February. In September, we are excited to take the Gulf Business Breakfast Briefing series to Saudi Arabia for the very first time, where we will spotlight the Saudi Vision 2030 and the booming Saudi market. Later that month, on September 24th, we will also be hosting our highly anticipated annual Gulf Business Awards, honoring the region's top companies and leaders across a wide range of sectors. Do visit our website for more details. The nominations and sponsorships are now open. And if you have any questions now, you can talk to me or my team here. Before I hand over to our group editor, Gareth, please join me in watching a video from our partners, XLGP. Thank you. Enjoy your morning.
Good morning, everyone. My name is Gareth van Zyl, and I'm the Group Editor of Gulf Business. Thank you very much for making the time to come through to our event today. We're looking forward to a really exciting set of panel sessions, and it's a real pleasure to welcome you to the latest edition of this particular breakfast briefing, this time with a sharp focus on the UAE's ever-evolving investment landscape. On behalf of the Gulf Business team, I'd like to give a warm thank you to our distinguished guests, expert speakers, and valued partners for joining us here today. The UAE remains one of the most dynamic investment destinations anywhere on the planet. In 2024, the country attracted over $23 billion in foreign direct investment, ranking it firmly in the top 10 worldwide. Alongside this, we continue to see significant private wealth migration into the UAE. In fact, just this week, Henley & Partners has announced that there's an estimated 9,000 dollar millionaires who are going to enter the UAE this year alone. This is the biggest number of any migration anywhere in the world in terms of dollar millionaires, bigger than the US. These inflows aren't just driving capital markets, they're reshaping real estate, business formation, and family wealth planning across the board. This is now the third edition of our Gulf Business Breakfast Briefing Series for 2025. We began the year with real estate, followed by technology and telecoms. And in September, as Manish mentioned, we will be taking our series to Saudi Arabia for the very first time to spotlight the kingdom's rapid economic transformation and build up to Vision 2030. Our goal with these briefings is simple: to create a platform where CEOs, investors, policymakers, and operators can engage directly with the trends shaping the region. Our first session today is going to explore the topic of global mobility, residence by investment, and business setup in the UAE. These are all key pillars that continue to attract entrepreneurs and high net worth individuals into the country. For that particular panel, we're going to be joined by Hojeige, who is the Group CEO of Virtugroup, Rahul Singh, who is the Managing Director of Thrifty Dollar Car and Rental, Sanjay, Sachdev, who is the Group Marketing Director for Leptos Estates Greece and Cyprus, Vishwajit, Patil, who is the Senior Executive Officer for Nuvama Private DIFC, and that panel will be moderated by Claire Fulstake, who is a Director at Orbcom and an expert in the field of high net worth individuals and global mobility. Then we will turn to the UAE's vibrant capital markets and the IPO pipeline. For this discussion, we will welcome Yogesh Khairajani, who is a global market strategist at Century Financial, Manasvi Ghelani, who is an associate director at Frost & Sullivan, Muhammed Hassan, who is a capital markets leader at PwC, PricewaterhouseCoopers. And this session will be moderated by Nigel Silito, who is the CEO of Insight Discovery. Then our final panel will focus on the world's largest wealth shift that is underway. And joining us for that discussion will be Damian Hitchen, who is the CEO of Saxo Bank MENA, Yasmine Omari, Head of Wealth Planning at Bank of Singapore, Gemma Wild, Head of Collaboration at MENA GPB HSBC, and Dave Chaggar, who's the Sales Director at the Capital Club. It will be moderated by Karishma Hingorani, who is the founder of Karishma Connect. So please stay in touch with us throughout this full program. We will try and have Q&A sessions after each of these panels. We've also got a very interesting keynote which will be coming up next from Hojeige of Virtugroup. And if you're not following Gulf Business on LinkedIn or Instagram, please, I encourage you to do so. And also at the end of this event, we will be giving away 5 vouchers from Thrifty and Dollar for car rentals. Now, these are decent cars. So I've been told that apparently it's a Jeep Wrangler and a Dodge Charger. Apparently these are really good. So I think there's a bowl that is going to be doing the rounds, but if somebody can just assist us, please, with collecting any business cards, and then we'll accumulate those, and then at the end of the event, we will announce the 5 winners. So that's just something just to bear in mind. So thank you very much for joining us today once again, and we are now also going to just play a short showreel that highlights the history of Gulf Business and also shows some of the work that we've been doing. Thank you very much. In the dynamic landscape of the GCC region, one publication has been the trusted companion for businesses, industry leaders, and professionals for almost 3 decades. Gulf Business brings you the pulse of the region's industries, growth stories, news and developments, and so much more. Gulf Business is the most authoritative source for comprehensive insights in the region. From finance to technology, real estate to healthcare, and hospitality to energy, we cover it all. The Gulf Business team is always on the clock to bring you in-depth articles, interviews, and exclusive features to keep you in the know. Our magazine boasts a rich history of captivating covers and compelling content, from the latest market trends and investment opportunities to emerging technologies and regulatory developments. Gulf Business is your gateway to the Middle East's thriving business landscape. But we don't just report the news, we celebrate excellence. Gulf Business is renowned for its prestigious annual awards, recognizing outstanding achievements across various industries. Our esteemed Gulf Business Awards honor visionary leaders, innovative companies, and game-changing initiatives that shape the future of business in the GCC region. In the digital era, Gulf Business goes beyond print. Our online platform provides instant access to breaking news, industry analysis, and exclusive interviews, keeping you connected wherever you are. For almost 3 decades, we've been the beacon of business intelligence in the GCC region. Join the countless professionals, entrepreneurs, and industry leaders who rely on us for timely, accurate, and relevant information. Gulf Business, celebrating a legacy of presenting news beyond the headlines. Great, thank you very much. Thank you, Raymond, for playing that video. So, as mentioned, I'm going to welcome onto stage our first keynote speaker, George Hojeige, who is the Group CEO of Virtugroup. So Virtugroup is behind the well-known UAE business setup brand VirtuZone. I'm sure that we've all know of it. It's a leading provider of company formation, corporate services, and tax consultancy here in the UAE. And earlier this year, it was acquired by Accenture, which is a Singapore-based global business services platform servicing over 20,000 clients across 25 cities and 9 markets in the Asia-Pacific region. George's presentation is titled Finding the Right Fit, Profiling Investors and M&A Deals, and I'm hoping he can give us a bit of a backstory to that big merger and acquisition that they've just undergone. Thank you very much.
Etisalat, how may I help you? Sorry, I hate these mics. I just feel a bit like a robot here. Anyway, thank you all for being here. I'm honored to be here. Thanks to the Gulf Business team. Always been a great partner of ours. Manish and the team are doing a great job, and it's great to have you here in the room. So I was asked to share my experience and my team's experience, our team's experience about the recent acquisition that happened, if some of you heard of it, in December, where VirtuZone was acquired by a big platform from Singapore, a global corporate services platform that's backed by a private equity from Hong Kong. So I'm here to share the experience with you, to share our road to this exit, the pitfalls that we went through, and try, everybody in this room, if you're a business owner or if you're C-level or if you're a senior manager, have thought of exits before, and you've thought, sorry, I have to stay on this side because the remote doesn't work if I come here. So if all of you have thought about exits, and it's important, we learned so much through this transaction. I've learned so much as a CEO as well, and I'm here to share with you how to, pick the best partner, pick the best investor, what to watch out for, and how things usually go. It's not as rosy as you think. When you see somebody and you say, hey, congrats on the exit, the guy probably needs a psychiatric hospital by now, because the process is not easy, it's long, and it's tough. So I'll tell you a bit about us to start with. So obviously, VirtuZone, some of you know it, and some of you don't. We're the largest corporate service provider in the Middle East. We have about 250 employees. We've serviced over 80,000 companies so far, so we've helped about 80,000 customers set up their business, entrepreneurs set up their business. And obviously, throughout the years, the business grew from a company formation business to offering corporate services, so anything from bank account openings, taxation, tax advisory, accounting, insurance, all these, obviously visas, golden visas, all the stuff that you can think of. Throughout our journey, we've been approached many times by investors that were looking to either acquire the business or acquire part of the business, and we were always exploring all opportunities, but in some cases, right off the bat, we weren't interested. In other cases, we explored very far in, and we got to the points where we basically, we were ready to close the deal, and for one reason or another, it didn't work out. But what was important, and what's to learn from this story, is that not every investor or not every buyer is a right fit. Everybody loves the money, everybody wants to run for the money, everybody wants to grab the money, but it could be the worst thing that you've ever done for a business that you've spent years and years and years building and that you cherish so much. So, what you need to know is that investors or M&A partners, they're not just funders, right? They become co-pilots in your business. Nobody's going to give you his money and walk away. Everybody wants to interfere in the business. Everybody wants to get involved. Everybody wants to know what you're doing with that money. What are you doing moving forward? People don't give free money away. That stuff doesn't exist. So one of the most dangerous things is to have the wrong fit, right? If there's a strategic drift, cultural conflict, or stalled innovation, for example, you've been in your business for a very long time, you have a vision about your business, you have a plan for the future, and then somebody comes along and he has a completely different idea. You're screwed from the beginning, right? This is not going to work. This is never going to work no matter how much money they give you. One case in point is obviously Microsoft, who in 2014 bought a small mobile company known as Nokia, if you've heard of it. I mean, it was the biggest, cell phone manufacturer in the world. They had the best phones. We all, pretty sure here, everybody's old enough to have had a Nokia once in their life. Yeah, so everybody had a Nokia. It was the best phones ever. It was a match made in heaven. Microsoft and Nokia, two giants that were going to take over and revolutionize the mobile industry. What happened? Nokia went bust. 9,000 people got laid off. It never worked. It was an American company, a fast growth company, full of nerds that were innovative, that were always innovating, that were coming up with new technologies, partnering up with a Finnish company that's very social, and it's all about work-life balance, and it's all about traditional and protection of the brand and protection of the models and so on, and never took off. So that's a very good example at a very high level of an investor that doesn't fit, or a merger or an acquisition that doesn't fit. The right fit is somebody who's ready for accelerated growth, that gives you access to new markets, that gives you enhanced services, fresh capital, of course, better governance, and long-term resilience. You want to look in an investor. Believe me, guys, today, there's no absence of money in the market. If you need financing and you're a good business, you'll have a lot of financing and you'll have access to a lot of capital. 15 years ago, who knew of what a VC was, or venture capital? Today, it seems like 1 person out of 2 is working in VC or in venture capital. So there's a lot of capital floating around, especially after COVID, especially after the boom of crypto that we saw in the last few years, the boom of technology valuations. There's a lot of money. A lot of money was printed during crypto as well, so there's a lot what we call powder in the market. There's a lot of powder floating around. So there's a lot of money that's ready to be invested. So don't worry, don't jump on the first money that comes to you. There is a lot of money out there. Jump on the right investor, and you have to be aligned in your visions. So let me tell you a bit about a case study, which is our case study that I lived firsthand. First of all, if you've never been through a merger and an acquisition or through due diligence, it's the worst thing that can happen to a CEO, because you're basically stuck between the buyer that's sitting there trying to find all your faults so he can bring the valuation down as much as possible, and your partners or stakeholders or shareholders. In my case, I was also a partner in the business, so my partners who are saying, well, why did you do this and why did you do that? I said, well, you weren't complaining when you were getting the money, were you? So you're stuck between somebody who's trying to knock down your work so they can bring down the valuation of the company as much as possible, and your partners who now really want the deal to get done and are blaming you for everything that's going, that's negative in the due diligence. And the main reason or job of a due diligence team, and believe me, you get an army. I thought it was going to be 1 or 2 people. We'd have a few chats. This was an army for 6 months, right? So KPMG, you're talking about big law offices. You're talking about big, compliance officers and so on and so forth. We're literally scrutinizing everything that we had done in the last 6-7 years. So put that apart, the due diligence process. Let's talk about the case study. So Virtuzone, 15 years in the business. Like I told you, we set up over 80,000 entrepreneurs, 250 plus experts. We're tax certified, we're tax advisors, and so on and so forth. So why was Essentium a good fit for us? So we're a local company, right? We're a local company. We operate in the UAE. At that time, we were going to get into Saudi Arabia, but we operate in the UAE. We are, call it an SME, becoming an enterprise. And here comes along a global business services platform that supports over themselves as well 50,000 client entities across 44 cities in 22 markets in Asia Pacific, the Middle East, the Americas, and Europe. So now, all of a sudden, we have an option of having offices in Miami, we have offices in Japan, we have offices in China, we have offices in Singapore, we have offices all over the world, which we would have never dreamed of. 2,300 employees around the world, and backed by Hill House Investment, which is a private equity firm with $100 billion in a fund that's ready to fund our growth. So here we are. The next natural step in our growth would have been to go international, to start by Saudi and then go international. And here comes a company that's looking to basically build a global company with very deep pockets, very similar culture to ours. We'll talk about it in a second. And we said, you know what? This is the right fit. And they had the money, they respected our vision, they respected our culture, and they said, look, guys, we want to do this with you. We want to grow, and we want you to be part of our growth, and we want to be part of yours. And it made total sense for us. Why it's working at the moment, we have complementary strengths. Virtuzone's local market leadership is bolstered by a sense of international infrastructures. We have a campaign coming out tomorrow or the day after, a timely campaign, I must say, an opportunistic campaign given the recent events, saying that we can service you from 22 offices worldwide. Which other corporate service provider can service you from 22 offices worldwide here? I can't name one, right? So this is thanks to that merger, or acquisition rather. We have shared core values, so we're very customer-centric. And you know, due diligence works both ways. So as they were doing due diligence on us, we were doing due diligence on them. And believe me, these guys, when they do due diligence, they don't mess around. They interviewed my wife, they interviewed the other partner's wife, they interviewed, you know, they really get into the culture of things. So they really want to know how you think, what your culture is, what your values are, and that's the right way to do things. We have tangible business gains because we now have, our clients now have access to global payroll solutions, which we didn't do before, seamless international compliance, they have access to new markets, we have offices in the BVI if you want to do offshores and so on and so forth. So there is a complementarity of our services, of our culture, and everything that comes in between. And this is very, very, very important for the business to grow and for business continuity, right? In terms of values, for example, you know, they're a huge platform. You know, we're talking about 2,300 employees and spanning from Japan to the BVI or Cayman Islands. The first thing that happened when the recent events happened is it said, George, we got to get on an urgent call. I said, okay, you know, we're in the Middle East here and we're not too worried about what's going on, right? Okay, contingency plan. We need a contingency plan within 24 hours for the employee safety, for the employee security, for the business continuity, you know, to safeguard the data, safeguard the cash, safeguard. I'm like, hey, guys, chill, relax. You know, we're in the Middle East. If something's not going wrong, we're worried, right? Things have to always, something has to go wrong all the time. No, we sat, you know, we want a full report, we want a full plan. I had to write a 12-page plan in about 4 or 5 hours. Thank you, ChatGPT. For a, you know, 4 or 5 hours, 12-page plan addressing everything from employee safety and security to business continuity to data security to all these things. But you know what? They're right. And this is something that we would say, you know, we'll just roll with it. We'll go with the flow. We'll see what happens. We've been through COVID. It doesn't matter, whatever. I'll tell you what, if it starts raining bombs, you don't have a lot of time to think about what to do, right? God forbid. So this is stuff that they bring, right, to the table. They bring governance, they bring planning, they bring years of experience in terms of, you know, crisis management and to these things. They've been through it before. This is the third time that these guys are buying, they're buying companies all over the planet and coming out with a global platform to be able to exit later as a global company. So the key characteristics you want to look for when you're profiling the right investor, and I hope for all of you that in the near future or the distant future, you get investors on board and you get to exit or you get to do a merger or an acquisition. It's a very, very interesting experience. You want to look for strategic synergy. So does the investor enhance your capabilities or dilute your focus, right? And that could be different for everyone. You could be the type of business that, you know what, I don't want to deal with the business anymore. Let them take it over. You want to be, you know what, this is my business. I want to grow it to the next level, and I want these guys to help me grow it to the next level. Will the investment open doors to new markets, capital, or technology? Technology is a big, you know, technology is a big one at the moment. We're all talking about technology. We're all talking about AI. Do these guys have the capability to bring in technologies? Do they have existing technologies that you can bring into your business? Do they have a team that could bring the technology into your business? Because most of us here, or a lot of us here in some of our industries, we're not very technology driven. A lot of us are, or a lot of you are. We weren't, for example, a very technology driven business. We're an old traditional corporate services business, a lot of paperwork, you know, paper pushing and stuff like that. So these guys are now introducing new technologies, how it could be more efficient, save on cost, and hence make more money, obviously. Operational and cultural compatibility. So is there alignment in decision-making, leadership styles, and pace of innovation? This is obviously super important. If you have somebody that wants to come in and wants to slow down the growth of the business and you're running at 100 miles an hour, this is going to be a clash right away. And the contrary, if you want to grow the business slowly and they want growth because they want EBITDA and they want to exit ASAP, that's also going to create a huge clash. To make it to summarize it, does the investor bring friction or flow, right? friction. If at every decision you guys are going to start arguing and you're going to have a big powwow to decide what to do, it's not going to be efficient for the business. If he's bringing flow, then he's supporting you. He believes in your skills. He believes in your vision, and then he's just supporting you to grow through that. Then you have long-term vision and value. Do you share the same vision and goals, not just this year, but 5 years from now? If you're selling your business, do you want to exit in 5 years, or do you want to have this business for the rest of your life? Well, if he wants to exit in 5 years, you have a bit of a problem, right? Because it's not going to work. So you have to be aligned, not just today, not just, hey, this is great money, it's going to give me great money, we're going to do very well, we're going to grow next year, we're going to open up in Saudi. No, where do you want to be in 5 years, in 3 years, in 5 years, in 10 years? Where do you want your business to go? Does he agree with that? Do they agree with that? Does he or she, or do they agree with that? Do you have the same vision? Because that's inevitably going to bring you problems down the line if you're not aligned from the start. And finally, are they future-proofing your business or just funding it? Is this a private equity that's funded 150 companies and they're just throwing $1 million into your business and then hoping for the best? Or is this a company that's throwing $1 million and making sure that your business is going to thrive and that they're going to make good returns on it? Believe me, you'd be surprised. I'm sure you've all heard it before. Oh, they need to deploy. They need to deploy. So how private equities work is that they raise money. And once they've raised that money and that money is in the bank, they then need to deploy it to, the financiers among you understand what I mean. They need then to deploy it and make sure to tell the investors, look, we've deployed the money, we've deployed the investment. So a lot of time, there'll just be deployment just for the sake of deployment, just to make sure that the money's placed in the market and it's not still in the bank. This is not the kind of investor you want. The kind of investor that you want is an investor that cares, an investor that helps you grow the business. So that's it for my part. I hope it was not as boring as I thought it was. So I hope you enjoyed it, and please feel free if you have any questions, whether now or later on. Feel free. I'm happy to share my experience with you, and I wish you all of you, an exit one day, because it's a great experience. It's very rewarding, and what you don't know is that the road after the exit is actually as interesting, if not more interesting, than the road before it. Thank you, Gareth. Thank you very much. Thanks.
Thank you very much. Thank you so much. So I'm just going to ask some of our team to get all mic'd up. Thank you very much for that keynote, George. I think obviously that acquisition this year was one of the big business news stories that we ran on Gulf Business as well. And I think it was interesting to get some insights from George on how that went about and what's transpired since then. So we've got our next panel that is coming up, and before I get into who the panelists are, I'm going to just describe very quickly what this topic is about. So it's entitled From the UAE to the World, Global Mobility and Residence by Investment. This panel will delve into how geopolitical risks are reshaping citizenship and relocation strategies. And key discussion points are set to include all the multiple residence by investment options that exist out there, especially for high net worth individuals within the UAE. Obviously, there's quite a few markets out there in recent years, such as Greece, Portugal, and so on, which have been very successful with their golden visa programs. And then also just the general topic around global mobility trends in this world at the moment, obviously with the current geopolitical situation that is transpiring and all the changes that have been happening in the world this year. And then also we'll delve into strategic planning for personal and capital security, among a wide range of other areas. So we have a top lineup to discuss this topic for you here today, and I'm hoping that you're going to learn a lot out of this. So if I can please welcome onto stage with a warm round of applause, Claire Filstake, who is the Director of Orbcom. And as I said earlier, we've worked with Claire quite a bit. She's an absolute expert in the high net worth individual space, and particularly in areas of global mobility, golden visas, and more. If we can please have a warm round of applause for Claire. Claire, if you can please take your seats on this
Good
side.
morning,
Thank you
everybody.
very much. Right, then I'm welcoming back onto stage George Hojeige from the Group CEO of Virtugroup, who's also in this panel, and obviously we all know George from the keynote that he's delivered, so if we can please have a warm round of applause there. Right, next to him is Rahul Singh, who is the Managing Director of Thrifty and Dollar Car Rental, and if we can please have a warm round of applause. Just on a side note, I've been reminded by my team that I'm very much, I've got a very old way of thinking. There's not really a bucket or something that goes around, but we've got it all digitally so we can see everybody's names and numbers and emails on our system, so we will randomly call that out afterwards as well. So that's just something that I wanted to highlight regarding that voucher from Thrifty and Dollar Car Rental. Right, our next speaker is Vishwajit Patil, who is Senior Executive Officer SEO for Nuvama Private DIFC. And finally, we have Sanjay Sachdev, who is the Group Marketing Director at Leptos Estate, Greece and Cyprus, who will give us the global perspective today. Great, thank you very much. Claire, I'm going to hand it over to you. Thank you.
Great, thank you, Gareth. Good morning, everyone. It's a very big pleasure for me to be here moderating this panel with such an interesting lineup. I am indeed very passionate about the topic of international relocation and global mobility. Obviously, there is no doubt that individuals and families are always looking for the best setups in terms of a safe environment, stable environment, good education system, health care, and so on. And entrepreneurs around the world are looking for the best solutions in terms of tax efficiency, a vibrant business environment, and so on. I guess jurisdictions all around the world are very aware about that and how they have to be competing against each other to offer the best solutions for these businessmen, entrepreneurs, and families willing to relocate globally. The UAE, obviously, and even more since the establishment of the Golden Visa opportunity, has definitely positioned itself very efficiently as a great hub for business operations and investment. But it's true that also other jurisdictions are improving their own offering to raise their appeal. So now the UAE has to compete and keep being attractive for global businesses and entrepreneurs. So I'd like to know, having an expert like you, George, how do you think that the UAE is actually keeping on the top of the list for these opportunities, and what are the key points that the country offers?
Well, thank you, Claire. Thank you, Claire. Pleasure to be here again in this panel. Look, I think that the UAE over the years has demonstrated its resilience in tough times and in good times as well. One of the key aspects, beside you hear it everywhere, you read it everywhere. It's got great infrastructure, great talent. It's a great lifestyle. It's sun 300, sometimes too strong, but sun 365 days a year. Business is thriving. It's not affected by global inflation. It's doing amazingly well. But I think one key element that we often overlook. We probably, the ones that have been here for a long time, do realize it, but others might not, is the agility of the system here, right? And we saw that during COVID. The ability to make quick decision making and to implement those decisions is super, super important in a business environment if you want to thrive. Unfortunately, the competition that we're up against, whether it's in the West with social systems and so on, and decisions take forever to be taken, the democratic systems where you need 100,000 approvals and 100,000 votes to get something through, well, most of the time it's too late. Don't stand a chance against jurisdictions like this where, decisions can be taken very quickly and implemented very quickly. So the ability to adapt to the environment is something that the business community and the business environment here, obviously backed by a great government that's super agile and super visionary, but you can't. It's very difficult to compete with it. Look, who competes with Dubai today? Singapore, maybe a bit. Portugal has tried with its residency by investment. Residency program or golden visa program. Yes, a lot of people that were in Europe and don't want to go too far from home have gone to Portugal. The real entrepreneurs, the real ambitious people are all ending up here, and we see it in our business because we're at first hand to see what kind of capital is flowing in and what kind of FDI is flowing in. And we're seeing more money than ever, more capital than ever come to Dubai. And unlike before, it's not, hey, I want to start up a company so I can save a bit of taxes from Europe. Now they're coming here, they're bringing their families, they're registering their kids in school, they're buying houses, they're moving their capital into bank accounts. So this place, I can assure you here, we have a first-hand view at the future. Sometimes we call ourselves the crystal ball readers. But, we see the money coming in first, right? And that money is going to be sorry for the word, deployed, like I was saying, and that money is going to be invested. So that money is around for at least 2-3 years. So I can tell you that for the next 2-3 years, everything is in great order, and we're seeing a good flow and a growing flow of capital coming in. So that's maybe reassuring to everyone, given the current circumstances. Thanks, Claire.
Excellent. Thank you so much, George. That's very clear about the advantages that Dubai and the UAE offers. Now, it's true that other jurisdictions, you mentioned Portugal in the European Union, are also very attractive for different topics. These usually residency by investment permits are in general linked with property investment, and many countries offer great opportunities with a good lifestyle balance and very agreeable and pleasant climate and so on. Two of these jurisdictions will be Cyprus or Greece, and I'm happy we have Sanjay here to discuss about these advantages of these two locations and how you see these residency programs influencing the real estate market, because that's where you're an expert in.
Thanks, Claire. Well, can you hear me? Okay. So Dubai is, as George said, number one. There's no comparison between Dubai and other markets. I used to work in the Dubai market for many years. But I think it's a question of diversification. Here, wealth generation is every day. People make money hand over fist. People have invested in the real estate market here. I think some people own multiple properties. My pitch is basically, while you have your investments here, why not diversify into other markets, which gives you another set of benefits. Dubai gives you one set of benefits, we give you another basket of benefits. So what are we offering? We're offering Europe. We're offering the Mediterranean Sea. We're offering a beautiful home or a villa, an apartment right on the sea with beautiful Mediterranean sea views. We offer you 4 seasons, spring, summer, autumn, winter. We offer you permanent residency for the whole family, which leads to a European passport if you so desire. We give you free health and free education, which is very important. We give you Schengen access. So you get a PR on whichever passport you're on. You get these beautiful cards that you can travel across Europe.
Sign me up, man. Sign me up. You're making us living the dream here.
Yeah, it's a dream. The issue is awareness. Okay, the issue that we face for both Cyprus and Greece. You all talked about Portugal. Portugal, yes, was one of the most popular programs, but Portugal, Ireland, and Spain have now shut their programs via real estate for 2-3 reasons. One, they met their targets. 2, they did not want too much of a population imbalance. And 3, they did not want a situation where the locals could not find housing. So it becomes an issue for the government. Greece went the other way. They didn't close their program. They moved it from 250,000 euros to 800,000 euros, but it's still available. Cyprus remains at 300,000 euros, which is 1.2 million dirham. Okay, here your golden visa is 2 million. We're giving you permanent residency in 1.2 million, a beautiful home, and as I said, again, a beautiful home, permanent residency, passport, free health, free education, ability to set up business and roam around Europe without going to VFS. Thank you.
Thank you very much, Sanjay. So yeah, we have the competition. It's more than a competition, it's a complementary situation where you can invest over here in Dubai and obviously why not expand onto European Union as well.
we do residency by investment as well, so I support what you're saying, so yeah.
Excellent. So everything is complementary. Now, obviously, all this influx of people moving across the globe, relocating, investing in new locations, also has an impact on the mobility of those people. For businessmen and companies, I guess they need a fleet of cars. For the newcomers, families, and so on, they also need to be mobile and be able to move on the ground. So I'd like to know a little bit more with you, Rahul, about how companies like Thrifty and Dollar are adapting their business model to service for these people moving across the globe.
Thanks, Ben. So we've been around for 50 years. We're as old as the country here. So we started the car rental business in 1972. About a year, 1971 is where the country was formed, I think, right? So we understand we have a very good understanding that this is pretty much UAE is a very, very transient economy, right? Has been traditionally been a very transient economy with people coming in for shorter durations, a few months and a few years or whatever, and then going back. And with all what the government has been doing, I mean, I think they sort of, it's played out even further now with attracting, as George had mentioned, high net worth people and from drawing money from all over the world, and all the high net worth and the ultra high net worth people definitely have something or the other to do with Dubai or the UAE for sure. All right. So when the Russian problem happened, we had the Russians coming in here more than anybody else, right? So it's been there. So we understand what really is required in terms of the mobility. That's the first aspect where what people look at mobility when they come in to the country. And so we have multiple solutions. So we part of two companies. We operate two brands, which are two franchise brands, Thrifty and Dollar, American franchise, part of the Hertz Global Group now. And so we offer solutions. Obviously, the very short-term rentals is fine, but keeping in mind that we offer monthly rentals, so people can choose the car they want. We offer as many as I think we have about 70 or 75 variants, different kind of cars, ranging from the small car to the mid-size to the four-wheel drive to the luxury segment. So we offer all sorts of cars which people can choose from. We run a fleet of about, this year we'll close with a fleet of about 50,000 vehicles. So we operate 50,000 vehicles and we're the largest players here. So we offer every kind of solution which somebody may want in terms of a short-term rental, which we sort of say as a monthly rental, which can roll over month on month. And then we have, the other aspect is that, if somebody is looking at buying a car or wants to get into a car of his choice, right? For example, he wants to drive a Range Rover, or he wants whatever car he wants. We can do that bidding for them in terms of buying that car and leasing it out to him, right? And he can just drive the car and pay the lease rental, and he doesn't need to get into the hassles of ownership and the other related aspects of insurance and maintenance and all sorts of things. We manage everything, and he just drives the car. So he's mobile 365 days a year. If he has an accident tomorrow, he gets a replacement, whatever. So we look after it, everything. And a more advanced solution of that is, in case if there are many people from, a lot of, I would say more in the Asian side, Asian mentality is to own the vehicle, right? Not so much as in the Western world, but ownership is a big concept in Asia, right? So people prefer to own the vehicles. So just as a hybrid solution, we can offer the car. The customer can still choose the car he wants. We buy the car and lease it out to him, and he has the option to buy the car at the end of the lease term at a predetermined price. The advantage here is that the driver or the customer has the advantages of ownership, but without really committing to the hassles of ownership. And it is optional. The second biggest advantage is it's optional. After the end of the lease term, 2 years, 3 years, whatever that lease term is, if he so chooses that he doesn't want the vehicle, he can just say thank you very much and I'm done with it and I just want to move on, right? So it's got the benefits of ownership without the hassles of ownership, and you can still own the car. So these are all the solutions, and we see a lot of people now are sort of taking this kind of solution and wanting these kind of solutions because it is innovative and it solves a very big need. And helps them to achieve their goal of ownership also, right? So we are offering we offer a range of solutions, and we sort of with the growth which the country's had, it's also helped our business, and that's why we've grown from where we were, a small car rental business, now into 50,000 fleet, growing into 50,000 fleet, which is
excellent.
And we thank the economy, the government and what they've been doing, and it's a wonderful.
So it should keep growing even more and more. Thank you so much, Rahul. So I think we've covered a little bit, in this topic of global mobility, the importance to be able to set up a business in the best conditions, the opportunities for the property investment, and now also how to be able to move around and own your car in the best conditions. Now, with global mobility comes also the need for proper wealth management strategy. That's where I'm very happy to talk with you, Vishwajit. As Nuvama Private has recently launched operation in Dubai, I believe it's August 2024, so a bit under a year ago. I'd like to know a bit how you're actually using the Dubai platform, to service your global clients and help them in their financial strategies, tax-related challenges, and so on.
Thanks, Claire. Good morning, everyone. And Gulf Business, thank you for the lovely breakfast, which brings us with the full energy to talk here. Thank you, everyone, for here early morning. So basically, when George and Sanjay were talking, it was like reminding me I'm sitting with my client and they really want to compare. Because every ultra HNI family promoters want to have a second passport or a golden visa or second destination for their next generation. It comes with diversification, access to international market, and how they want to achieve the expansions in their businesses. So typically, coming back to Nuvama, we are a good 25-year-old company. We are the largest advisory firm in India, one of the largest, you can say. We manage close to $55 billion assets under management. So we are trying to give a 360 solutions for our clients through our DIFC office, which is apart from the main core business, which is financial services advisory. A lot of families want to move to GCC, specifically UAE or other part of the world in Europe and all. So there are pros and cons. Normally there are 4-5 key questions or pillars, what we call, that comes in question. One is how that country is geopolitically managing their relationship internationally, which is really important for last 4-5 years and last 1 year thanks to Donald Trump. Secondly comes about is the health benefits or what kind of cost they will have it in that country. The next generation, so educational benefits. Social factors also come in picture. Cost of living for these people is reasonably less because these are all ultra HNIs and all. But if it's a middle class families, they would definitely like to see what kind of cost they have to go through if they need to have it that. And strategic location of that country, connectivity to home country also plays a very key important role when it comes to these kind of decisions. Obviously then secondaries are cost of setting up the things, businesses, passport, visas and all comes. So when we look at it, UAE looks very attractive for people because it's close to our home country in India because we belong to that, so that's why. Asia also gets attracted to UAE. And as George said earlier, the adaptability of the government on new systems and all is so fast, so vast, that makes life everyone easy. You just go for your golden visa, your medical is done in 30 minutes, uploaded in 30 minutes, your Emirates ID is done in 10 minutes, and next day Emirates ID print message already comes. These kind of things. They allow the mobility systems to have these options of having a new car. Literally what he was, Rahul was telling about it, I have seen that where your client goes and buys a new car and then their team registers that, you get a 1 year, 2 year options and all that. So when you look at the ecosystem, what they have built, thanks to Emirates and Etihad, which allows to connect to the world. DP World gives access to manufacturing and trading hubs to connect to 85% of the population in the world, which is fantastic. The way the economy and tourism department, the port systems and all are ready to give a red carpet and welcome to the new business communities to have access to this systems and flourish and nourish from here is amazing. I've been here for good more than 15 years, so I have seen it very closely. Been with Nuvama for 1 year, so it's more we are interacting with ultra HNI families and trying to give that access to them. So the legal system, the education system, the healthcare system, all that is really going to the next level, and it's allowing them to have many people who come from the other part of the West. I won't mention the country names, but they say that when I have to go for particular medical appointments and all, I have to wait for 1 month, 1 week, 10 days, whatever. But here I can request and the systems are ready to accept them and try to give the best possible medical solutions. Same goes for education. A lot of international universities want to have branches or the extended version here where the next generation can use that. So this gives you a fantastic one. There are certain comparisons which come to Western world. The pros and cons are there, but the social life, that is also important factor for the family members, what people want to consider. That also really plays, Dubai scores really high on that also, I would say. So I'll go a little bit, I'll be biased with George. and I'll be little not biased with Sanjay on that, but yes, when it comes to the comparisons, people like to see 4-5 pillars, what they want to achieve in next 20, 30 years, and then they take the decision. But two important factors which I have always seen, taxation on their business income and portfolio income, and secondly is the healthcare conditions. That is very important when people are taking these decisions. Thank you.
Excellent, thank you so much. I guess that's very, yes, very, very key, these 5 pillars that almost everyone is looking after. And I'm very happy we had this conversation to be able to see, what are the main things to look at when you're trying to expand globally or relocate, and the different advantages of the UAE and other locations. Now I'd like a bit to open the conversations to our audience. Does anyone have any question for any one of our panelists today?
Maybe we answered everything.
Too well.
Maybe we answered everything.
You have a guy offer you any car you want in the world. You don't have a question?
So the one line which I always say, patience pays well. You cannot be a millionaire or billionaire overnight. And if somebody promises you 4-5% guaranteed every month, that a lot of calls I also get on that. Due respect, there might be a strategy they want to run, but if somebody is giving me a 5% guaranteed on a monthly, 60% annually, then I always ask the question, you might be making 150% and you're not giving me full of that, and they cut my phone. So you should be very, there are many offerings happen across the globe, including UAE. You should be careful. You read your offer documents carefully, try to see that you meet them in person, try to visit their office, understand the dynamics. And the best part is that if you go through a regulated channels like DIFC, ADGM, free zones, or the banks where you can go and meet the advisors and all, and then take a proper call on that, that is always good. The important factor as a discipline is that I always tell client, keep reading and reviewing your portfolio every month so you know where it is happening, how it's happening, whether it is going in the right direction, if not, and if there is any urgent attention required. Overnight millionaire is normally, this is the thing which I feel is in a market, which is not true. At least I haven't seen that in the last 15, 18 years. You have a patience, you get a good double-digit returns, you beat inflation, and you make good money out of it. The most important part here is that UAE offers access to all international markets beautifully by the regulated jurisdictions, and you name it, and major banks are already in the region where they have a representative office or a branch office or something, which gives you access to right from Australia to Zimbabwe, Argentina to Zambia, those kind of things. So that's the beauty of this market. Your crypto is, I think, one of the top 5 holdings are from UAE only in the world. So that kind of accessibility and adaptability government has given on digital side also, which is a new sector which everyone would like to work on it. I hope I answered.
I'll just add that. So I'm not an expert in this field, but I think if it's something that's too good to be true, it's probably not true, right? So, I mean, these kind of 4%, 5%, or these are, I guess, but there are still people who get scammed into it, right? So
it's basically, I was talking to Anisha only on that, and it's all about is human greed. If we stop on that, it will be, if somebody can make you double your money, why will he ask your money? They will keep making their money double. That I always say. Somebody says, I want a capital guaranteed, I want 15%. I said, tell me the area, I'll put my money. You cannot have that.
Yeah, for sure.
Yeah.
Yes. Sorry. Thank you.
Thank you so much for that panel. My name is Rahim Lakhani, and I think the question is basically for everyone here. We live in a bit of a global turmoil, as we all know, and there are things happening very much in the neighborhood. How will this affect your business directly if this continues, and what protections have you guys put in place to ensure that your business is not disrupted?
Okay, so basically, I think what I started off by saying is diversify. Don't put all your eggs in one basket. I think that makes a lot of rational common sense. Have a plan B, have a plan C. So if there's a turmoil in certain areas, you can still have a home and a residency and a life in another area. And I think this whole business of mobility is only increasing year by year. Residency by investment or second passports, PR is something that's happened in the last 5-7 years. Even the golden visa of Dubai is about 3-4 years old. So these kind of products are very new compared to other products in the world. And the reason is a plan B, a plan C for your family. You don't have to rely on one area of this planet. There are many other areas where you can invest and have a safety net. It's not about tourism, it's about a permanent home, like your home anywhere in the world. It's a home for you. So it gives you that safety in your mind that there's turmoil here, I can go to my other home till the turmoil passes. And the investment is not only a dead investment, it's not that you don't get ROI. For the time that you're not there, you get rental income. If you want to bail out, you get capital appreciation. So there's a lot of investment benefits. So the bottom line is diversify, have a plan B and C. That's my advice.
Yeah, that's good advice. And your question is quite general, but your question is in two parts. The first one is, how is what happened going to affect the business? It will, right? It was very short, thank God. It didn't last long. Hopefully this is the end of it. But we are in a part of the world where business is based on sentiment a lot, right? I remember many years ago, I had a client and I said, how's business? He said, oh, it's terrible. And I said, why is it terrible? He said, well, have you seen the oil prices? I said, you sell cell phones. What does it have to do with the oil prices? Well, everybody's saying the oil prices are very low, so the economy is not good. Well, it's based on sentiment. So I think we'll have a small dip. Thank God, I mean, the timing of it, summer is usually a bit slower in this part of the world, so we're hoping that come September we have the usual flow of migrations. And the second part of the question is, if it keeps going on, hopefully not, or God forbid, if it keeps going on, how do you plan for the business? And the answer to that is in two parts, right? First, you have the part of continuity of the business continuity. How do you safeguard that? How do you safeguard the safety and security of your employees, of your cash, of your data, of all that? And this, obviously, you have to take measures to diversify and contingency for that. For example, make sure that all your data is off-site, make sure that all your cash is placed in a jurisdiction that's safe in case you have a run on the banks and all these things. I'm talking doomsday scenarios here, obviously. I'm not talking what would probably happen in a week or so. What's your business continuity plan for your expats? Most of us have a lot of expats employees. If their embassies start calling them home, how do you deal with that? Are you set up for remote work? Are you set up for remote work in terms of equipment, of systems, of software and all that? That's from the business continuity and logistics side. On the other side, there's the actual business, right? The commercial side of the business. So what happens in situations like this, and we learned this from the COVID, is that the market goes from something this big to this big. So you're fighting for a market that's probably 10 times smaller than what it was, depending on what the situation is. In this case, I don't think it would be 10 times smaller, but you're fighting for a much smaller market. So you have to have a commercial strategy in place on how are you going to go get a bigger market share of this smaller market. For example, you will see that a lot of your competitors will start dying because they don't have the cash to, not dying literally, dying as a business, because they don't have the cash or they don't have the runway to keep going, or they don't have the cash flow capabilities of being able to. So in some instances, it's actually, I mean, there's no good way to say this. It's good. If you're a bigger business, it's good because it'll take away all the small parasites that you have around you, especially in our industry. And we saw it happen during COVID. But on the other hand, you also have to fight much harder for a bigger market share. So you have to come up with commercial strategies. You have to lower your margins. You have, in COVID, we sold sometimes at cost, if not under cost, in order to preserve cash flow and to make sure that we had the cash to keep going, because we didn't know how long COVID was gonna last. In times of war, in times of crisis, in times of disasters, you have to do the same thing. You have to safeguard your cash. You have to safeguard your cash flow, and you have to make sure that you get as big market share as you can out of a much smaller market than it normally would be, and that entails a very aggressive commercial strategy. That's how we would deal with it.
Thank you very much.
Right, I think we've got maybe just very quick comments because we are running
Yeah.
short on time. Thank you.
So on this, what Sanjay said or George said, it's true. Diversification on financial portfolios is important to go through this high and lows. When it comes to business, diversification is important. Every country can come into this situation, so that will definitely disrupt the supplies or demand and all. So keeping that in mind, we all human beings are adaptive to these systems, and we find some solutions. Where the tariff war is going on, a lot of people talking Asia would like to use GCC as a hub to start waiving or getting some discounts on tariffs and all. They want to have a warehouses or manufacturing units here and all, which is opportunity to one country, loss to the another. But there is a solution which comes out. So these kind of things are there. As long as you are attentive to these solutions, and the countries like UAE and other countries are giving that welcome adaptability and acceptance of these new theories, I think that can be the best solutions. And that's how these people come in picture. Hey, I can't do business in A country, why don't you suggest me B? And he comes in picture. I'm paying too much taxes in A country. He comes in picture and says, I'll go to a B country, there it has a less tax. Somebody will say a more adaptability where I have to go and do that things. Those kind of things has to be there. Thank you.
Great, thank you very much. Can we please have a warm round of applause for Claire, George, Rahul, Vishwajit and Sanjay. Thank you very much. And I'm just...
Anyone who wants to meet me later, who've got clients or who want to partner, you're most welcome. After these sessions, thank you.
Great, thank you very much. Another warm round of applause there, thank you.
Thank
I'm
you.
just going to ask Claire just to help Nigel with the headsets there so that we can get that going. Great, so we are moving on to the next segments of our events. And our next segment is all going to be about the UAE IPO outlook for 2025 and beyond. So this topic is going to look at what's next in the UAE's capital markets and how investors can benefit. Key topics that we're going to look at is obviously the next wave of public listings. There's been quite a few big ones over the last few years. I think one of the biggest tech IPOs happened in the UAE recently with Talabat. The market readiness versus the global exchanges, the impact of macroeconomic factors such as interest rates and obviously Trump's tariffs on the markets and the potential knock-on effect that has had. So we've got a top lineup to discuss this topic for you today. And if I can please welcome onto stage with a warm round of applause, Nigel Sillitoe, who is the CEO of Insight Discovery. Thank you, Nigel. And joining him will be Manasvi Ghelani, who is the Associate Director, Customer Engagement, Middle East and Africa, Frost & Sullivan. And then we have Yogesh Khairajani, who is the Global Market Strategist for Century Financial. And finally, we have Muhammed Hassan, who is the Capital Markets Leader at PwC. Thank you. If you can have a big, warm round of applause. And Nigel, I'm going to hand it over to you. Thank you.
Great. Well, good morning, ladies and gentlemen, and thank you, Gulf Business, for allowing me to moderate this session. I've got the very easy job of just asking the questions to these experts. But before we start, it's good to know who's here in the room. So could you just put up your hand if you've actually invested in an IPO in the UAE before? Okay, just I think one or two takers. And what about people's knowledge of IPOs? Could the acronym, for example, mean individual pay zone? So who actually knows much about IPOs? Okay, maybe about half. So I think what might be a good starting point is actually explaining, before we get into some technical aspects, what is an IPO. An IPO, as many of you will be aware, is a private company that's offering its shares to the public for the very first time. And the players involved in any IPO, besides the company and the management, will be a regulator, maybe an investment banker, and also lawyers, and obviously institutional and retail investors. But another good question to ask might be, how do you actually access an IPO. So maybe, Yogesh, I could ask you to explain how, because you're running a wealth management business, how do people access an IPO in the UAE?
So good morning, everyone, and would like to congratulate the panel before me. They really talked about very, very insightful information, and I'm pleased to be here with one of the experienced panel in the IPO industry. And IPOs, as I see, very few people did last year, but a lot of you already know about IPOs. The access to the IPOs have become a lot more easier than it used to be. It just requires a new investor number, which you can get it from DFN and ADX, and these days the entire process has been digitalized. And to access the IPOs, you can always use platforms related to DFM. And these days there are regional banks who have always provided this service. So banks like Emirates, NBD and others, they have this service accessible. I think one of the very recent developments which have happened, the Daman IPO funds and the all other kind of IPO funds are available for a lot of retail investors to invest in. So you could basically be a part of an IPO industry by investing into a fund. And sometimes it happens that a lot of IPOs get oversubscribed. And I think investing in IPO funds is one of the ways to get access to it.
What about this Abu Dhabi IPO fund? What's their role?
Yes, even Abu Dhabi IPO fund is something which a lot of investors have now access to. And it really makes it easier to invest into a lot of new companies. And I think it kind of reduces your risk to pick that one specific company. So when you go through a fund, it really has that expertise to pick out the best of the funds. And you could choose between them and really reduce down your risk.
Okay, great. Before we get into some detail, what are the challenges facing companies who go through an IPO? Who'd like to answer that?
Great. Morning, everyone, and thanks for having me here on this panel. I think you know there are two sides of those challenges. One is the commercial readiness of a company to go to an IPO. Are they making enough money, profitability? Will they be able to attract enough investors? And then the second part of the challenge is the operational readiness. Are they ready to operate as a listed company? And I think to the panel we had earlier, there was quite a good discussion around the success of businesses and how this region and this country is offering that platform. You have to assess your maturity of the business, and have you reached to a point where you are generating enough profitability where other investors, and whether that is institutional investors or retail investors like people in this room, individuals, would be interested. And the UAE market is a lot about dividend yield, that continued stable flow of dividends. Almost like investing in a real estate where you get 6 to 7% yield. IPO market is a little bit following that trend where investors are looking for those stocks where they can get that stable yield. So I think once that is available, that is a good stage of your business maturity to look for a public listing and expand the brand of your business. But the second part, which sometimes get overlooked, is the operational readiness. Do you have the right capability in the organization, people with experience in financial reporting, corporate governance? As George was saying earlier, the due diligence process he went through, maybe not to that extent, but a similar due diligence process companies go through, because you are asking for new investor money. And it doesn't end there. Then you become a listed company and you have to answer to the regulators and investors. So having that right readiness prior to IPO is quite key, is a challenge, but you can convert this into an opportunity.
And just to add to that, of course, most of the points are covered, but you know, there's one thing, you cannot time the IPO because of the events happening, but you can price it to perfection. Maybe not time it to perfection, but price it to perfection. And a classic example is Flyness. I mean, of course, the legwork would have started 8 months, a year ago. They ended up in this phase where it's a total chaos in that zone, in that space that they work in. But that's something that will draw the investors, draw the community from outside and locally to have faith in you, and because you've done your work, right? I mean, numbers speak at the end of it. So maybe price it to perfection if you can't time it to perfection.
Great. Actually, coming back to you, Muhammed, I know PwC produce reports on IPOs, which focuses on the UAE, GCC, and the rest of the world. So can you provide us with some data on how many IPOs there have been, let's say, in the UAE versus other parts of the world?
Yeah, no, thanks for that. So we issue this quarterly watch. It's called GCC IPO Plus Watch. It's an interactive watch. So if you, after this panel, maybe if you just go on your phone and type GCC Plus IPO Watch Q1 25, you will see an interactive page open up on PwC's website. So we've issued for quarter one. We'll be issuing next month for quarter two, or essentially the first half of the year. It's a GCC watch, so there were 11 IPOs in total across principally Saudi Arabia, UAE, and a couple in other GCC markets, raising $1.6 billion in quarter one. It was similar to the performance, actually a bit better in terms of proceeds last quarter, which raised $1.2 billion. So half of these IPOs are smaller SME businesses in Saudi, and the remaining half is kind of equally divided across Saudi, UAE, and a couple of other GCC countries. We saw the listing of Alpha data in Abu Dhabi, and although it's not covered in the Q1 watch, but I'm sure everybody is aware of the Dubai residential IPO that happened recently, and quite a successful IPO, raising more than 2 billion dirhams in proceeds. 26 times oversubscribed, and their valuation is 14% up. They were 10% up on the day. So what this tells you is when a business comes, and especially a lot of these sort of state-owned, historically state-owned businesses, part of those large government groups, they bring a lot of stability in terms of the profitability and the dividend yield, and they sustain the volatility much better than some of those other stocks which are maybe more prone to the volatility in terms of economic uncertainty or geopolitical uncertainty. And that's where you see a bit of a mixed performance in terms of the share price movement. I think the only other data point I would touch on is the indices in the GCC in UAE also. They are up almost 3 to 4% year to date. That is, we've obviously gone, to a roller coaster ride with the tariffs in April, and then things have obviously come back. So we are in the green year to date, and the Q2 has been better than Q1, or maybe the second part of the Q2 has been better than Q1. So we all kind of, wait and see how the second half goes. As said earlier, there may be a short-term sort of slowdown given the recent events, but hopefully towards the end of the year we start to see more and more companies coming to market.
Okay, well, let's move forward to the outlook for IPOs over the next 12 months or so. So this is for Manasvi and Muhammed. So how would you describe the current state of the UAE's capital markets, in particular IPOs, compared to other global emerging markets? So maybe you can start.
Sure, thank you. In one word, resilient. And I would say that because, yes, while factually the H1 has been slower compared to the rest of the years, we've probably just seen a couple which Hassan alluded to. But the valuations of the ones that are lined up in the pipeline will probably make up for it. And two, I mean, last year same time, MENA IPO. Yes, this is not a UAE number, but MENA number. This year it's 30% higher. This is despite slowdown in the global issuances. So again, that's a fair representation of even the UAE performance. You could make the correlation there. So we're very hopeful. Two, of course, he mentioned to the stability that comes with government-linked entities going public. So that's the lineup that's happening. So we know that the volatility and the liquidity in the market will be taken care of. And lastly, what goes for this region particularly is the political stability, which is directly linked to the economic stability compared to the rest of the world. So I strongly believe that once everything settles down geopolitically, H2 or even the last quarter would be a bumper year.
Mohammed, anything you want to add?
No, I think that's a fair summary. There's often a window of summers is typically slow for investing activity as well. So I think towards the second half of this year, we should see that there are a number of IPOs in the pipeline. So we'll see if they'll find the market opportunity to go this year.
Okay, well, let's move to market access. So there's been a surge in IPO activity in the UAE. Do you think this momentum is sustainable, or are we nearing saturation? Who'd like to answer that?
No, sure. Yeah. I'm just going to get a bit of water.
And while you're thinking about that, Mohammed, the next question is, which government or sovereign-led IPOs are in the pipeline, and what are their challenges compared to private companies?
Okay,
why don't you take that?
I'll start with that. So I'm not going to speculate, but let's talk about the ones that are in the public domain and have been making round. Arguably, the most anticipated is Etihad Airways. So that's been in the works for a bit. We've heard commentary from a lot of hospitality owners. I'll have to 5. These are some of the names that are making the rounds. Of course, then there are some names in the healthcare space. Of course, AI-linked entities as well are in the pipeline. Is what what we've or let's call it a tech space, the tech-enabled entities, platforms as well. Sorry, and your second question was on the challenges? Sorry.
Yes, the challenges.
Yeah. So,
compared to private companies.
Yeah. So actually the ones that are government linked, they have a unique set of challenge, right? I mean, the pressure to perform is immense. I mean, you're always going to be questioned on how either you tanked on day one or how you had a weak performance in the first quarter. So the pressure to perform is immense compared to private entities. 2, I would say, this requires, these have been a set of confidential, private ministry-linked entities. So to go public, to have your full disclosures in place needs a cultural and technical shift, like entirely. You need to be out there on a periodic basis talking about your guidances, your performance, and the lack of it, if at all. So these are some of the concerns and challenges compared to private entities. Of course, private entities have their own, they don't have a head start like the government entities do, right? I mean, they have their own challenges in terms of always having an investment thesis in place, always talking about scalability and liquidity in the market. So yes, that's happening. But government entities also have a lot of these organizational, shareholding patterns that are very complex, and they need to decipher and explain it to the investors and how it's all going to be sorted at the end of it.
Great. Mohammed, actually have a more interesting question for you, and that is, which sectors have been the most active in the UAE for IPOs, and what types of companies do you believe are still unrepresented in the public markets?
That's a good question. So look, I think if you go back to the post-COVID, early post-COVID period, we saw a huge number of IPOs and great activity, and a lot of that was driven by the energy sector. So we had a number of ADNOC companies listed. We had the listing of DIWA, so in the energy and the utility space. And what has happened since is, and obviously the oil prices impact the energy IPOs, so we have seen a bit of a slowdown in that sector, but where we have seen an uptick is in other sectors. So if you look at the last 2 years of IPOs across the region, but particularly in the UAE, we have seen retail, the likes of Talabat and Spinneys, we've seen hospitality IPOs, healthcare IPOs, and that to the point that Sanjay made around diversification, the same thing applies to the stock markets as well. That historically, UAE market in particular has been principally real estate and banks or financial institutions, and more recently has been the government-backed energy companies. But the intention, as we read it from a government and leadership perspective, is the only way you actually expand the liquidity and the market capitalization of stock markets is by bringing in private businesses. Saudi is quite matured, or maybe relatively more matured in that space. A lot of the family businesses list in Saudi, and I think the same is, let's say, a vision here that through these listings of large government-backed organizations, and that gives enough confidence to the family businesses and large corporates in the UAE to access capital markets and that way expand the market capitalization of the exchange.
Great, okay, thanks. And Yogesh, what should retail investors know about participating in upcoming IPOs, and how do they avoid hype-driven ones like Taliban, for example?
I think this is one of those examples where a lot of investors get FOMO, fear of missing out from an IPO. But I think we need to learn from the past experiences that hype is always created about every company, but we have to really be very intelligent in choosing that what kind of company we're going to invest in, because the moment we hear the term IPO, kind of dream envisions in our brain that we are going to buy this IPO and it's going to surge at the very beginning and we're going to make millions out of it. But what we really need to understand is we need to read the prospectus, we need to see what is the PE ratio, how the financials are placed, and something what investment consultants can also do for you. And it is always advised to see that why a company is raising the capital. Is it for the expansion or is it for to pay the existing debt? Because I think that is what happens a lot of times, that we are just blindly diving into because of the valuation of the IPO. I think Talabat was one of the highest tech valuation for that year in 2022. And if you see the PE ratio of that company, it was much higher than the average industry PE ratio, what that sector of industry should have. So I think we need to be very careful. We need to be very diligent about picking the company, because not every IPO becomes successful. A lot of times investors have a lot of fear of missing out, so they dive into it hoping for something bigger to happen.
Great. And what about reforms? What policy reforms or infrastructure upgrades would further accelerate market maturity, let's say in the next 5 years? I think this is for you, Muhammed.
So I think, like the sort of the evolution of the growth in the businesses in the stock markets, regulation and the regulators are also kind of on the same path. The regulator for DFM and ADX listings is the Securities and Commodities Authority, ESCA. And they have this year, I think, launched the parallel market, so a market for smaller companies. The Dubai residential IPO was essentially a fund listing. It was a REIT, it is a REIT, but it listed through a fund regulation. And so these sort of enhancements to the regulatory landscape is going to provide a bigger sort of platform for companies, not just as limited liability companies, but companies from different types of regulatory setup to come to the exchange. So I think further growth and development in the regulatory space around that. And the other key thing is the dual listings and listings of foreign companies. We see a lot of times we get queries from companies, whether in China or other parts of Asia, that they may not have business in the UAE, but they see all the good happening here and they want to come to the UAE stock market. But then there are current regulatory setups where they'll have to potentially look for a primary listing in the home market, and then they do a second listing here. So I think this is one of the focus areas of the local exchange and the regulators, to encourage more and more foreign companies listing, and that I think remains an area where regulatory landscape will continue to evolve.
Okay, great. Well, let's go to investor strategy before we open it up to questions. So, Manasvi, how can family offices or regional high net worth investors make the most of this market phase while managing downside risk?
Sure, I think the easiest would be to associate yourself with government-linked entities or the strategic IPOs. Usually, assets associated with these tend to give regular returns despite slowdowns, despite geopolitical risks that may be. Usually, that's been the history, and we see that trend continue. Second would ideally be aligning yourself to the vision statements and the diversification strategies that are aligned by these government entities. Everybody has their vision 2030, next 2030 year lined up. So you can read that document. There are many sectors mentioned over there, and they will do, come what may, they will have something to do in terms of liquidity or market cap to push these sectors into transforming and becoming big. So healthcare, logistics, construction-linked entities, tourism, these have been the sectors. And lastly, I would say, use your network, and he alluded to as well, pre-IPO proceeds or access to your pre-IPO issuances would be something that you would want to leverage your network for. You can gain a lot of information and a lot of analysis on why this actually is happening and why are we seeing this IPO. And you can obviously adjust your holdings depending on these professional advisory that you get from them.
Okay, let's go beyond UAE. So what's happening in the rest of the GCC when it comes to IPOs? Maybe one of you would like to answer that.
So I think, as I said earlier, the GCC IPOs, Flynas has been the largest, one of the largest IPOs in Saudi, quite successful. We've covered this in our Q1 watch, that overall $1.6 billion of proceeds were raised this year. So volume-wise of new IPOs, proceeds-wise, the performance this year so far has been largely aligned with last year. We obviously have to see how the second half of the year goes. In terms of the performance of those sort of the stock markets regionally, we have seen them come back to a little bit into the positive territory after the sort of the slowdown or the drop that we saw in April and May. So overall, it's been a stable kind of first half. No fireworks in terms of too many IPOs or valuations, but I think we're starting to see a pickup in the likes of Flynas and Dubai Residential, and we'll see, to the points raised earlier, how many of those IPOs in the pipeline actually come to the market in the second half.
And just to add to that, I mean, when you asked outside in the rest of GCC, for example, there's an interesting anecdote I read. When OQ listed the exploration business, it was a $2 billion IPO. And that IPO alone, at that time, was larger than any UK IPO or UK market capitalization itself. So that gives you some sense on, there is a plan by the rest of the countries as well. Yes, Qatar, Bahrain, Kuwait, maybe smaller, but steady. QI entities would be an interesting one to watch out for as well. And of course, KSA is pretty much our neighbor, so we know what's happening day in, day out, and a direct comparison. But even with that, with UAE, it's a volume versus value game, right? I mean, more IPOs in KSA may not be necessarily a rosier picture if the valuations of the UAE make up for it. So, of course, there are these other regions doing their job as well.
Okay, great. Well, just final question then. In one quick sentence, what's your boldest prediction for the UAE capital markets by 2030?
Okay. Interesting. So, recently, earlier this year, the UAE market cap hit 1 trillion, if I'm not mistaken, and I believe by 2030 it could double because of the push from the government entities, and this the UAE capital market could become the central top-tier hub between Singapore and London. That's my belief.
Okay. Yogesh?
Because you asked for the boldest prediction, so I'm going to go ahead and say that maybe by 2030 we see the UAE market IPO valuations reaching as up as $2 trillion. And I feel that at least one of the big tech giants like we have right now in US, the Magnificent Sevens or the darlings of Wall Street as we know, maybe by 2030 we have one of these tech giants listed in UAE. And I think I feel it's absolutely possible given how UAE has been throughout. We have been the natural mediator, and we have had a diplomatic stance to a lot of regional conflicts. So I think this is something which is opening doors to the more and more companies coming in, and the kind of technical and innovative stance we have taken in last few years. I think we are very open to welcome a lot of big giants by the next 5 years.
Great, thank you. And Muhammed?
I think given the trajectory of where the country is heading and the economic vision, I hope and I expect that the UAE exchange becomes, by that time and beyond, more of an international exchange, encouraging and essentially listing global businesses who have footprint in the region as well as large businesses. And those could be as a result of UAE companies investing into other global businesses, making acquisitions. So I think we will see a transformation of large UAE names, or maybe small UAE names becoming large, not just driven by the UAE growth, but actually making acquisitions globally. And then you see companies listing in the UAE, which are not just UAE businesses, with a massive, large global footprint, which will really take the scale of the market capitalization of the UAE more into the global exchange listing.
Okay, great. Well, thank you for that. Let's open it up to questions. So if you have a question, please just shout out your name and your company as well. Who would like to ask the first question? Any takers? No. In that case, I think thank you very much for your time, and we'll now pass you back. Thank you.
Great. Thank you so much. Warm round of applause. Yeah, thank you so much, Nigel, Yogesh, Manasvi, and Muhammed, for that interesting session. If we can just have another round of applause, please. And I'm just going to ask you to kindly exit the stage. And if Nigel can please just assist our next moderator with getting mic'd up. Great, so we're now reaching our final panel session of the day. Thank you to everybody who has stuck through. Just as a reminder, we do have that giveaway right at the end, which we will announce. And this panel that we're going to be doing now is going to focus on how the world's largest shift in capital is reshaping investment strategies in the UAE and beyond. So as I mentioned earlier in my speech, the biggest shift in generational wealth is about to happen. Asia and the Middle East is going to play an integral part as part of all of that. And literally there's going to be trillions of dollars in motion. And our team is going to talk about this. They're going to talk about the great wealth transfer and what it means, digital natives and changing the investment priorities, as well as succession planning, private banking, and wealth tech in the UAE. So I think if our moderator is mic'd up. Great, so I'm going to introduce onto stage Karishma Hingorani, who is the founder and podcaster of Karishma Connect. If we can please have a warm round of applause for Karishma. And following her is Damian Hitchen, who is the CEO of Saxo Bank MENA. And then we have Yasmine Omari, the head of wealth planning at Bank of Singapore. Along with her is Dave Chaggar, Sales Director at Capital Club Limited. And finally, we have Gemma Wild, who's Head of Global Collaboration, MENA GPB HSBC Bank. Thank you very much. Right, Karishma, over to you.
Thanks, Gareth. Good morning, everyone. It's a topic we have touched upon briefly across the panels. I think we have been speaking about investments. We've been speaking, Nigel briefly touched upon family offices in the panel before as well, and I look forward to discussing that further with some brilliant panelists that I have right here. Well, it's a topic that's actually come up on my feed pretty much very often lately, and that is about next-gen investing and how our investors are changing, how our investment strategy is evolving. And of course, there's a lot happening in the world, but how is that impacting the UAE and how is that impacting our region and beyond? And I look forward to discussing that. My first question is for Yasmine. You work closely with wealthy families in the UAE. What key shifts have you been seeing as wealth moves on to the next generation?
Okay, so I think my key word, and you're probably going to hear me say this a lot during this session, is institutionalization. So there's an evolution from the way families are investing. Yeah. We're not talking about the transition having happened from the current gen to next generation, but the process that is in place. And there have been a number of factors. There's diversification, there's different types of investments that these families are entering. But a key driver has been the involvement of the next generation. So I like to call it the evolution from the virtual family office to a more institutionalized family office. in the sense that the investment activities of these families in the region have typically been a side business, embedded within their main operating cash cow family business. So investments happened on the side. They leveraged the infrastructure the business had, whether it's a CFO, certain audit functions in the business, and have managed a little investment pot that has now in some cases become larger than the business. The fact that it's grown so large has led to a need to institutionalize it, but also the fact that there's now a number of stakeholders involved. So typically, you know, current generation, first generation or second generation, there's only a number of individuals, maybe the founder and some of his advisors, close advisors, maybe a founder and the brother, sister. But now the next generation have come involved and there are a lot more people at stake. So it has meant that there's more people with an opinion, more consultation needs to happen, and we are slowly seeing that shift.
Interesting, interesting. Now, Gemma, you also work with a wide range of next-gen clients. Tell me, how are they different in terms of the investment priorities and the expectations that they have from a private bank?
So, thanks very much. I would say to start with, I'd echo your point, Yasmine, in terms of the institutionalisation. But I would say that that's for probably half of the cases, and then there's half of the cases that's quite the opposite. And actually, I'm sure we'll come on to about succession and people being sort of scared to bring up that topic and then create these structures. So, totally echo that. But in terms of what the World of Wealth report has told us recently is actually the next generation, 81%, have said they will change their wealth management advisors or private bank when the next generation takes over or inherits that wealth. So I think that tells us that actually the next generation are thinking about things differently. And that's because their approach, I would say, is all around digital fluency. It's around global exposure, but with a local understanding. It's around social values, and I think Yasmine may have a different view to this around, how much is around social impact in terms of these investors' appetite. I think social impact is important, but the returns have to be there as well. And also, we're seeing this next generation have perhaps more entrepreneurial mindsets. Some of the families that we look after, have been on much more of a wealth preservation journey over the last few years. And now the next generation are becoming involved and they want to take that on the next sort of, wealth growth journey. And therefore that shift is there. So in terms of for private banks or wealth managers, if you like, I think we need to be thinking it's definitely 24/7 digital access to their wealth without question. It's also providing a gateway to direct investments. So fortunately being part of HSBC, global bank in about 60 countries, also from a retail bank to a private bank to a global bank, we're fortunate to be able to connect our clients to those direct investment opportunities, which the next generation are expecting, I think, from their wealth manager. And also, I think we just need to recognise that this next gen aren't just inheriting this money, but they're reshaping what it means for them and the family going forward and really looking to grow from there.
I want to ask a follow-up there because those were one of the questions I had in mind. Like you said, the relationship with money and the relationship with capital is changing. And feel free to answer any of you, what have you noticed about the relationship and how it's evolved, especially as you deal with generational investors?
So Gemma alluded to the fact that I was going to slightly disagree. I think there's a lot of narrative about the next gen being more focused on ESG and investing in environmentally friendly companies, focusing with priority on governance. Now, and I know there's plenty of studies that kind of feed that narrative. But I mean, from what I've seen, and anecdotally, I should mention, is that I think it's not the myth, but I don't think it's as pervasive as people are led to believe. I think the next generation are very savvy. They are really after the returns. And doesn't mean that they're not interested in, social impact and value, but they do that through that other avenues, whether it's philanthropy, volunteering, but financial investments are very much financial investments. Yeah. And that's anecdotally in my opinion.
Anything you have to add to that? Gemma, anything you want to add?
No, I would agree. As I said, it's not just about the social impact side of things. There has to be an investment story and a logical story to making those investments. And as I agree with Yasmine that actually those individuals may take part in more, socially impactful businesses, etc., themselves. But when it comes to the family wealth, it's about returns and safety, etc.
Well, some interesting perspective there. Thank you so much. I will move on to Damian to ask that how is that changing? How is that translating into the platforms that we're looking at? What has changed about the way investors are investing today?
Good morning, everybody. And just a background, Saxo, whilst we have about 500,000, 600,000 direct clients, we also have over 200 finance institutions, large banks globally who use our trading technology as well. So we've got our own perspective from our own clients, but we've also got the perspective of our institutional partners, which are the large banks who are using our trading infrastructure for their end clients. I think what I would say on the platform side is that technology has been a huge enabler. So certainly over the last 10 years, but increasingly since COVID picked up, and that's with particular relevance to our institutional partners such as the banks. Everybody know, and Gemma touched upon it earlier, everybody wants digital access as an absolute minimum. So accessibility is number one, and how you provide that can take many different forms. But even traditional private bankers and traditional wealth patriarchs want access to at least see their portfolio on demand through their preferred channel. So that's the major one that's changed. Then it's the question of accessibility in terms of markets. So what markets are you offering? And increasingly that now needs to be global. So that needs to be a combination of local markets with global markets across multiple asset classes. And going forward, I only see that extending to incorporate adoption of crypto and even private equity, which going forward will probably be tokenized on blockchain. So all of these things going forward will continue to evolve. And then from platform users, from the end user perspective, clearly you need to have a good user experience, so UI, UX, because particularly with the younger generation, they're used to living on their phones across multiple industry service providers. So if you don't provide a clean, crisp UI, UX, if it's overcomplicated, if it's clunky, in the end, people are going to migrate and use other platforms. So that's really important. And then the final thing that we see with our direct clients in particular, who are regular users of our platform, is that you need to provide content and information that's timely. So if we look at what's happened in the last week, if we have a small cohort of commodities traders, which we do amongst our clients, and the events of the last few days unfold, then we need to provide information that's timely. So that what that can't be is it can't be the old traditional private banking monthly strategic outlook, because by the time you issue that, things have changed. It needs to be relevant, so it needs to be relevant for the right type of client that you have, and that's where AI very much comes into play in terms of how the industry is moving forward. So again, there's little point in a platform providing a media release or a piece of education about FX options if the client has only ever bought stocks, because the two are worlds apart and there's no connectivity, there's no relevance there. It needs to be engaging, so what you say needs to be interesting. It generally needs to have a point and have a direction, so you're giving your clients a couple of options based on the information that you're providing to them. And then the final point for platforms in particular is it needs to be actionable, because there's little value in leading a client who recognizes something's timely, it's relevant, it's engaging, if they then can't action it on your platform, because you're kind of defeating the point of running a platform business in that perspective. So those aspects we are seeing very much both in our direct business, but also working with our institutional partners closer and closer. That's a real focus point about how the end users want and demand services from a platform.
Interesting. Dave, you deal with this from a more human perspective? You are engaging with high net worth individuals outside the traditional banking circles. What have you observed about how are private clubs playing a role in this entire ecosystem?
So in Capital Club, I've noticed a significant change post-COVID in terms of the demographics within the club. Certainly we're seeing a lot more younger generation, early 20s to 30s, that are looking to join the club. Number one, in terms of having the private discussions, to be able to discuss in discretion, but also in terms of understanding from thought leaders, understanding what's actually the current trends happening in the market, and then how they can best adapt. So everything seems to have changed a lot since that kind of turning point, where there's so much wealth amongst the younger generation, especially the new entrants coming into Dubai. And, you know, they have a far greater kind of risk appetite, I would say, compared to the, you know, previous generations where they'd be more focused on their core business. The younger generations are always looking for more alternate options in terms of how best to invest, how best to grow. So it's far, far more dynamic. So that's something which we see on a daily basis within the club. And so us being the only private business members club and with the heritage, you know, we've got such a wide mix from the older generations, younger generations, those in between. And it's like an amalgamation of all different kind of thoughts and perspectives across so many different sectors. So, yeah, I think we've definitely noticed a significant shift, but also in terms of the mindset, you know, the whole concept of money, I think, has changed considerably over the last decade especially. So even when it comes to cryptocurrencies and VC investments, for argument's sake, these are much more highly adopted, especially amongst the younger generations. And it's sometimes interesting to see the older generation and younger generations within the families, and occasionally there can be a little bit of conflict in terms of the future direction of the company.
What do you think it will take to make sure we are collaborating in the right way across generations?
I think it's very important because at the end of the day, the main objective always needs to be wealth preservation, succession planning. So there needs to be some form of alignment between the older generation, the younger generation, and how they can have kind of combined direction or purpose in a way. So, you know, it takes a bit of kind of give and take from both sides. So I often see it whereby, you know, it's a case of learning or teaching the older generation as to, you know, how things are adapting. And in order to keep the growth perspective there needs to be that adaptation.
Thank you for that. Just to wrap up, because I know we are pressed for time, can I get one takeaway from each of you? What is that one thing you think investors or advisors should focus on in this new era of wealth that we're seeing today? We start with you.
I think it would be listen to your clients' needs. I know it's an old saying, but the reality is that clients today have a vastly wider panel of providers to speak to. A, because things are being digitized, but B, because more financial firms are setting up. It's easier to set up, particularly here in the UAE, than it used to be 10, 15, 20 years ago. So I think you need to listen to your clients' needs. You need to engage with them, because if you don't do that, you run the risk that they will go and find an alternative provider, which is becoming easier and easier. And again, with the advent of technology, a lot of our business, certainly on the platform and global market side, is becoming a little bit commoditized. You know, most platforms now can have access. If you have a look at some of the new crypto platforms, which started as purely crypto exchanges, most of the big boys around the world now have got traditional securities licenses, and they're offering their clients traditional securities, asset classes, in addition to cryptos. So I think the reality is you need to be aware of what's going on in the marketplace, but you need to speak to your clients and listen to your clients' need to be able to deliver that.
I think the basic of the industry is KYC, right? Know your customers. So I think that's a very valid point there. Yasmine, what do you want to say to that?
I think it's going to be ask the hard questions to your clients. So, I mean, as a bank, we have our RMs. The topics are obviously very investment focused, but sometimes we really don't dig deep enough into the client's wants, needs, whether it's questions about what their legacy is in terms of the wealth, what is the purpose of the wealth, what is it they want to do with their wealth. A lot of them have amassed vast amounts of wealth, but if you actually sit down and ask them what their objectives are, how to pass it on to the next generation, not even just from a taxation perspective, but just from a what do you want it to do? What do you want it to serve for your future generations? I think it's important to ask those questions and then direct and support our clients on that front.
True. Thank you. Dave?
So I think right now, all eyes around the world are on the UAE at the moment. You know, it really is the epicenter. Everybody's almost now looking to the UAE to see what's next. What are the future trends that are coming? As well as the wealth transfer that's happening internationally into the UAE. So it's a kind of a double flux in many respects. So I think whilst there is a significant amount of wealth coming into the UAE, there's also a significant amount of competition, which is growing more and more and more so. So at the same time, whilst it is kind of adapting very, very quickly from an institutional, from a government level, again, I think anybody who's offering their advice really needs to be on top of current trends, both domestically, internationally, and that's how best to kind of guide your clients, I would say.
Very true. I agree. It's changing by the hour. Gemma?
Thank you. So I think I'd just like to complement what Yasmine was saying, really. So our global entrepreneurship report, where we had interviewed 1,800 families with over 20 million of net worth, essentially. And in that report, it tells us that over 50% still don't have any succession plans. So you do require to have those conversations with clients, and it's quite an emotional topic. Obviously, with the families in this region as well, the relationships can be quite complex. Yeah. And therefore, I think you just need to start small and informal over some of these topics with your clients. It takes time, it takes trust and honesty. But also talking about that it's less about the end, it's not talking about death per se, it's actually the continuation of their legacy. And again, as Yasmine was saying, around what the objectives of that wealth are, make sure you're preserving it, make sure that it's safe, and also if something does happen in the family, that there's a plan set out to what to do. So that's it. Thank you.
That's a beautiful sum up. Thank you so much once again. I'll open the floor to any questions. Yeah, please.
Good morning. My name is Manib Khan with GE Vernova. Thank you for the insights. My question is related to how families, or high net worth families, are looking at alternative assets, particularly precious metals and cryptocurrency.
That one perhaps is a generational question. The next generation are much keener and adventurous to delve into the crypto space. That being said, the current generation have got a bit of FOMO, I think, and have seen the kids doing well and want to get involved a little bit. Commodities, I think, has been fairly standard. And again, it's a personal thing, I think, depending on the character of the individual. I wouldn't make any generational assumptions or anything on that front. And the alternative investments, is quite significant at the moment because we're seeing a lot more happening on that front now. Whereas previously we were chasing returns and just buy, sell, trading. Alts is putting a more institutionalized view on their wealth and looking at on long-term returns. So like 10-year returns in an alts fund, for example, as opposed to the traditional buy-selling.
Thank you. The lady there had a question.
If I move. Hi. My name's Emma Smalls. I'm Chief Control Officer for HSBC Private Bank. I work with Gemma. I promise I'm not a plant. So my question, actually, I was really interested, and so this is to Damian and Yasmine, both of you obviously working, in banks. And from a platform's perspective, I'm really interested to know how are you sort of navigating when you come from a bank and you've got regulations, obviously, and of course I'm going to ask a question about that. I work in controls. staying on top of your obligations from a regulatory perspective when it comes to platforms and the disclaimers and the journeys and everything that you need to go through and demonstrate versus, you know, new players coming into the market, perhaps coming from different jurisdictions. I mean, everyone has to comply with the UAE, but how are you sort of navigating that balance with keeping up to date with technology, navigating through your own regulatory obligations, and then making sure you're staying relevant and can compete with players coming into the market that maybe aren't part of those big organisations and institutions and therefore could be more flexible?
Thank you. That's a very relevant question. So I think, look, because we're both working in banks, multi-jurisdictional regulated banks, we have a duty of care to ensure that we're meeting those obligations and really leading in that way. Yes, there can be occasions where you may get a little bit frustrated that new entrants come into the market and maybe not be playing or applying the same standards, but ultimately we need to do what we need to do, both for our regulatory obligations, but also for our clients as well, because the regulations are there for a reason. In terms of how do we do that on a digital platform, if we, and just to clarify that Saxo is an execution-only, self-directed platform, we don't give financial advice, but we still do things like knowledge tests or appropriate tests. So if a client walks onto our platform, what we do not want to do, in the interest of client safety, is we don't want them to walk into our platform and be able to go and trade CFDs and FX options on day one, because they probably don't have the knowledge, the experience, and it can be very dangerous when you're using leverage, and therefore we have a duty of care to guide the client through that process. So we do have educational portals. We have a lot of webinars, seminars, etc., where clients can learn about that. But to allow those clients into that room to trade that asset class, we do have a lot of what we call appropriateness tests and suitability tests to ensure that they have the relevant knowledge to be able to trade those products before we allow them to trade those products. And indeed, with some of our institutional partners, some of our banking partners, they're also using those tools when they offer that to their clients, to their end clients, whether it's on a white label basis or they're doing it through their native app or native environment. So it's super relevant. Yes, it can be a little bit frustrating at times that other firms are doing things that we are not allowed to do, but then one has to have faith in the fact that the regulatory landscape will even that out over time. But the bottom line is we need to do what we need to do for the protection of our clients.
Maybe linking to that question, my name is Sebastian Bose. I'm from G Vernova as well. And linking to that question, for the big institutional banks, how do you compete with the neo-brokers of the world, like that don't have a big bank organization behind them and that can offer at way lower rates? How do you see this evolving, especially since you mentioned the young generation? They may be very interested in maximizing their profit by having very low cost on their platforms, right? Whereas as a large bank, I assume you always have a higher cost rate automatically. So how do you handle this moving forward as the new generation is looking to enter the market more and more?
Yeah, so I think it's fair to say, so existing clients, I think, are very familiar with the private banking proposition on our part anyway, because we're a pure play private bank, and can bear all the times. But they take advantage of everything that we offer. So it's not necessarily just investments, it's mortgages. Bank of Singapore is connected to OCBC Bank. So we can offer a really broad array of services and offerings. That being said, I think the EAMs are really putting a lot of pressure. External asset managers, clients are interacting directly with them now. And I think it is a bit of a struggle. So in terms of fees, I'm not sure how much more competitive banks can become, but I think it's more on the diversification and the bigger wealth picture and the bigger wealth story. For example, if you were banking with Bank of Singapore, some of our clients have trusts with Bank of Singapore trustees, so they're looking at the bigger wealth picture as opposed to just single investments. Yeah,
I would agree with that. I think that the customer that we certainly look after at HSBC generally use HSBC for the global platform. That's the type of customer we go after, the international customer that banks with us from a corporate perspective, wherever it is in the world. Their employees bank with us, the UBOs bank with us, so on and so forth. So they're fully entrenched in every service we provide, so therefore they don't really expect for one sort of commodity, if you like, us to be the cheapest. Yes, over time we can't be complacent enough to think that for some of those commodities that are easy to switch providers, for example, that they won't think, well, actually I'm going to use so-and-so platform over there for that trading, but I'll continue to use HSBC for everything else, etc. So therefore it's something that we have to ensure that we keep thinking about, but it's because there's a holistic solution and the global platform and what that provides for the customer.
And just one final point from a platform perspective. So what we see, and this is across the platform industry, I would say, is that when clients, new clients, younger clients come in, they're actually relatively lax in terms of who they use. They want access via their preferred channel, and they want quick access, and they probably want it with very competitive pricing. What does change is as they build their wealth, and I know Yasmine and Gemma have not touched upon this, but this is a big part of their institutions, is that when they build that wealth and their wealth become bigger, then trust and security play a huge part. And that's typically where you'll see people who may be trading with a new platform or neobank. As they grow that wealth through their investing career, they'll start then thinking about, okay, I know really need to be conscious about the fact about how secure this platform is. And particularly if we look at the crypto side of what's happened over the last 5-10 years, I don't think we've seen the last of that. There's been a number of exchanges that have gone down. People have lost assets. So I think it's an evolution in terms of the wealth journey, that the more wealth that you build, the more intrinsically you start asking the questions around security and trust.
But I think it brings another element which we were discussing a few days ago in the office, is whether the role of an RM is potentially going to become redundant in the space of AI, because a lot of it is very relationship based, and actually we're very torn. The current generation, we decided that no, they like touch, see, feel their RMs, but we are worried that the next generation is they're happy to log onto an app and basically do it all on an app. They don't offer great returns, right? We can cancel the account there, just go and set it up there. So I think it's quite an important question quite soon, actually. So I don't think it's as distant as we think it might be.
And I think from a bird's eye view of what we have within the club, so we've got a lot of the EAMs, a lot of the private banks that are kind of participating as members, accessing the club. As was rightly said, I think relationships are very, very important. It's a trust situation where a lot of people stick with their private banker for 10, 15 plus years. And I think a lot of, especially investors at the higher level, the higher you go up the net worth kind of ladder, then they're willing to pay for that level of service and comfort. And it's more about, again, wealth preservation. It's not necessarily about returns. It's more about how safe are those returns.
True. Well, thank you so much. Thank you so much for those questions, and thank you, panelists, for the insights. Thank you so much.
Everybody who has stuck it out this far, obviously we've got an exciting announcement about the winners of those vouchers from Thrifty and Dollar. As I mentioned earlier, they're pretty decent cars from what I've been told, a Jeep Wrangler and a Dodge Charger. So that sounds pretty good. But before I announce those winners, I just want to thank everybody who's come through today, all our speakers for their valuable insights, and also to our audience and our partners and sponsors. The conversations that we've had this morning not only highlight the scale of the opportunity here in the UAE, but also the pace at which the market here continues to evolve across investment migration, capital markets, and wealth management. On behalf of the Gulf Business team, I want to say thank you very much once again, and hopefully we'll see some of you at our next event in Saudi, and then at the end of the year in November, where we will be doing a special real estate panel as well. Okay, so now to get to the big announcements around the winners. So how this is going to work is that I'm just going to call out the names of the winners. We've got your contact details. So we've got your email addresses and your phone numbers. So what we will do is that we will contact you afterwards directly in order to give you those vouchers. But I'm just going to announce all the winners now. So the first winner is Neil Shoganeseks. We can just have a big round of applause there, please. And then Amal Subash, he's our next winner. Preeti Thomas, Keith Walker, and Savlana Takucha. I hope I've said the name correctly. So we will be, congratulations to all of those winners. We will be in touch with you later today in terms of getting those vouchers to you. And yes, thank you very much to everybody who stuck it through here once again, and I hope you have a great day and an excellent week. Thank you very much.